Hello, everyone. Welcome back to our channel, where we break down complex financial topics to help you navigate the world of investing with confidence. I'm thrilled to have you with us today as we unravel one of the most crucial choices new investors face. Should you use market orders or limit orders when entering the stock market? Stick around to learn which might be safer for you as a beginner. Let's dive right into it. When you're trading stocks, one of the first things you need to understand is how to actually place an order. This boils down to choosing between two primary types, market orders and limit orders. But what exactly are they, and which should you lean towards as you start your investment journey? A market order is quite straightforward. It's all about speed. You tell your broker to buy or sell a stock immediately at the best current price available. It's fast, it's simple, and it's perfect when your priority is ensuring the trade executes right away, especially with large-cap, liquid stocks like Apple or Microsoft. However, remember that market orders do carry the risk of price slippage, meaning, in a volatile market, you might buy at a higher price or sell at a lower one than you anticipated. On the flip side, limit orders give you price control. You set the maximum price you're willing to pay or the minimum price you'll accept. They're invaluable in volatile markets or when trading less liquid stocks, offering protection against paying too much or receiving too little. The trade-off? There's no guarantee your trade will execute, as the market must hit your specific price. For beginners, if market stability is your friend, market orders offer an easy entry. Yet if you're cautious about price fluctuations, limit orders add a layer of security by ensuring you don't stray from your desired investment strategy. If you're finding this helpful, do consider subscribing. We regularly share insights that help you make informed trading decisions, and following other traders' experiences and ideas is a great way to learn. Engaging with a community can really enhance your understanding and confidence as you venture into investing. Before we wrap up, it's crucial to acknowledge the inherent risks in trading. Investing should always be approached with caution. It's tempting to dive in with all your available funds, but remember, your portfolio's diversity is essential. Never invest money you can't afford to lose, and always keep a safety net for yourself and your loved ones. Thank you for joining us today. As you continue your trading journey, weigh your options carefully, whether it's market or limit orders. And remember, the choice depends on your unique goals and risk tolerance. Stay informed, stay cautious, and by all means, keep learning. Until next time, happy investing.